have their take as far as today's trade is concerned. I'm joined by Rohit Srivastava, founder of Strike Money Analytics and India Charts. Hi, afternoon, and welcome to the show. Okay, so not a great day today. As we can see, the markets are not able to hold on to the gains, but then still the undertone is bullish. Buy on dips, what's your recommendation on Nifty and Bank Nifty if at all someone wants to initiate any kind of trade positionally? Rohit.
Yeah, I think today is a good day to, just sit back and wait for this correction to end. But the view remains that somewhere it's a buy on dip. Let the dip happen and take that opportunity because the overall trend is likely to be up. We've sort of broken out last week out of that congestion zone that we were there for almost 3 weeks below 25,100. And having done that, the potential is that we will continue to add to those gains in the month ahead, in the month of July. Even though the earning season could have, a pretty mixed picture, given the kind of numbers we've seen, from advanced taxes or from GST. But I think the momentum simply driven by liquidity, the interest rate changes is what will keep it perked up. And therefore, purely when we are talking about the index, I think the downside is limited to either 25,400 or a worst case, if at all it breaks that down to, 25,300. But eventually we should be headed towards, all-time highs.
Agree to that, absolutely. There can be sessions where you can follow the approach of wait and watch, maybe the watch list on the market. Of course, the undertone overall is bullish, but at the same time, caution is something which our experts are constantly advising. Rohit, good afternoon. Yes, of course, the index-wise markets are not really showing good signs of contribution and positivity, but if we see news flows as well as the stock-specific action, there is a lot of action on that side. What are your stock-specific approaches for the day?
Well, there are sectors that you are seeing performance in, for example, metals. So that is clearly showing up in terms of positive performance, which has to do more with what is happening on the dollar, which then we end up anticipating higher commodity prices and a positive commodity cycle. So I think that is something which is standing out, and the dollar has been falling for a large part of the entire week. So that helps. Second is continue to focus on interest rate sensitive areas because the interest rate cycle is down. Even though we've had two cuts and a potential pause, I think there would be eventually more cuts on the table. And therefore, rate sensitives is where the action will continue to build over time. That includes sectors like autos, realty, and they become interesting play, and even financials. I think financials are probably poised to be one of the top performing sectors for the year as we go along and as credit offtake really picks up. And also they remain relatively more undervalued compared to other sectors. So that's sort of the easy part, to really focus on. But I do think other segments which have done well over the last 2 years, including power, which is sort of being talked about less and less, will also come back into focus.
All right. Since you've mentioned your sectors over here, Rohit, I just wanted to figure out if there's something specific in auto that you would want to highlight. Looking at the mixed bag numbers of sales across the board, what's on your radar and any specific buying call in any of the counters, auto ancillaries?
No, I cannot really recommend any stocks.
Your view on the sector and auto ancillaries?
Sorry?
Your view on the sector.
Yeah, that's what I've broadly given my outlook on these sectors.
Specific take looking at the sales numbers of auto companies.
So see that, like I said, these are near-term concerns. I think eventually the interest rate cycle is what drives, buying in this segment. And as the rate cycle, continues lower, I think you will see an improvement going forward in the next, few quarters. So the market might just end up discounting some of the near-term factors because you've already seen a significant correction last year in the auto index, so a lot of the negatives might get discounted, which is why in the beginning I said this quarter may be very interesting in terms of results because People may not expect great numbers, but we might still end up absorbing a lot of whatever happens in terms of volatility.
So that's the sectoral